One of the interesting things about setting up, say, a 30-minute time frame, and it's a neat time frame. It gives us a little bit of shock absorption, which is to say when the market volatility kicks up, one of the nice things about a slightly longer term intraday time frame is it gives us a little bit better shock absorption, but we have the choice to get out by end of day. And one of the aggressive levels that you're going to see me deploy again and again and again is cutting a range in half and looking at what's known as the halfback. And you can see here on the short that we triggered in the NASDAQ. This was actually an alert earlier this morning for those of you that may not have seen it. And for those of you that are going to be watching this later on, this is the short zone. We short into resistance. We do not short with the momentum to the downside. We find where the market is exhaustive and we short into that resistance. That creates the best risk-reward ratio for a trend follower. Now, we also know we're dealing with the holiday affected trading, and there might be a certain amount of kind of the market meandering around like we're seeing right now. But look at what it did before it started to bounce. It made a halfback, it made a golden mean retracement. So for those of you that are looking for targets, one of my favorite ways to look at a target is take the last major move and simply cut it in half. It's a powerful level. And so the reason this is such an important conversation is I think that entries are not that difficult to come by. I think we see entries all the time when we're looking especially at shorter term time frames, but we don't pay ourselves. A trade is not a winner until it hits a profit target. So that's really that range cut in half, and looking at the halfback or the golden mean just really is the gift that keeps on giving. So while there is a much more complete Fibonacci series, and that's related to Fibonacci, gang, probably two of the most important Fibonacci levels, probably the most widespread, widely accepted ones. I mean, if you just want to turn everything off, but those two, right, the 50% and the golden mean, I think you're going to be really looking at a very clean way of understanding retracements. And that's all that this is. And that is so easy. You don't even need Fibonacci. You just look at the range. If the Darvis is showing you the high to low, terrific. Cut it in half. Literally, just cut it in half. There's your halfback target. So think about your targets within the trends and ask yourself, is there a halfback target that I can either make an optional or a first profit target? Pay myself, move the stop to break even. And that's how when people say, how do you not let a winner turn into a loser? That is how you do it.